Hi guys, welcome back with me. Before watching this video, don't forget to like, comment, share and subscribe. Okay guys, I wanna read some article in investing.com by Ansab here. Fed seen getting more aggressive as inflation roars. The Federal Reserve is likely to raise US borrowing costs faster and further than previously expected after data on Thursday showed underlying inflation burdening out rather than cooling as expected. Overall, consumer prices climbed 0.1% last month from July. Economists had expected a decline and gained 88.3% from the year earlier period, the Labor Department reported. The data also showed accelerating inflation in services and a particularly worrisome rise in the cost of rent, which tends to be sticky from one month to the next, making the Fed's inflation fighting job all the more difficult. Putting a lid on escalating shelter costs is the linchpin to taming inflation, said Ron Temple, a managing director at Lazard Asset Management, but because rent rises tend to get locked in for 12-month terms, Fed rate hikes cannot quickly bring shelter costs to heel. The Fed still has more heavy lifting ahead. Fed Chair Jerome Powell and his colleagues have already raised borrowing costs faster this year than at any time since the 1980s to fight decades high inflation. After the record interest rate future, traders dumped any lingering bets on Fed policymakers slowing their rate hike pace when they meet next week. Red contrast now even reflects about 1 in 4 odds of a surprise full percentage point interest at the September 20 until 21 meeting, and Nomura's economists on Tuesday said they now believe a 100 basis point rate hike in the most likely outcome. Market underappreciated just how said U.S. inflation has become and the magnitude of response that will likely be required from the Fed to dissolve it. Nomura's economists wrote in a note in which they also predicted the Fed will need to lift its policy rate to 4.5% until 4.75% by February. Nomura also called for a 100 basis point rate hike in July, which turned out to be wrong. But Fed policymakers did end up delivering a bigger rate hike at their late July meeting than they had been signaling, in large part because of an unexpectedly hot inflation reading that came out just days before that meeting. As recently as June, when Fed policymakers last published their own policy path expression, only one main policy Fed President Neil Kashkari saw rates that high at the end of next year. Policymakers have downplayed the importance of any single data point and have said they expect to keep rising borrowing costs until there is a sustained drop in inflation, which is running far above the Fed's 2% target, despite an easing of prices for some items, such as airline tickets. The August CPI data said Fed policymaker hopes for the beginnings of a broader pullback. Price of new cars and household furnishings gained as the price of food, while core prices, which exclude volatile food and energy components, jumped 0.6% in August from July, twice what analysis followed by Reuters had expected. Okay guys, maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe. See you.